Right, so the fact that we've broken above this key trend line, guys, tells me that there is a potential to go higher. However, it's not 100% just yet, simply because we have this previous lower high at this area here, followed by a lower low. So this is a key area here, which needs to be broken and held above for me to essentially call the reversal to the upside. So let me just zoom into there. Make sure that's nice and accurate. Always zoom into your charts, guys, and try and get that nice and accurate lines, nice and accurate areas. Also, what I'll do is go down to the 4-hour time frame. This is how I like to do things. So drop down to the 4-hour time frame, draw a nice resistance area. From there to there. Zoom out and expand it. So we've got a nice strong resistance area here that we're currently in. And as long as we remain below it, I'm expecting this pair to reverse. However, if we break above it, I'll then be looking to go long on this pair. Now, there's multiple reasons why we could essentially see this breakout. If I get a Fibonacci quick. Does everyone know how to use Fibonacci properly? So you can see here that we've actually broken through all these areas. So the main levels, 31, 38.2, 50%, 61.8 has all been breached. We've also breached the 78.6. And as you can see, we are now testing the peak of this resistance area. Okay. Yeah, okay. Now, following that, we've broken this short-term Fibonacci. What I can do is also draw in a longer-term Fibonacci using the weekly time frame. So we can see we're headed for that 71% level, which we could essentially see a bounce off. Also, as you can see, we've got the 50 moving average here. And this 50 moving average essentially at the moment is showing a potential that we will hold below it, because we can see here that the moving averages, the fast period moving averages haven't actually crossed over. And the fact that they haven't crossed over means that we are still in a bearish trend. And this also, gave me a indication that we could potentially be seeing the price headed for that 71% level and then bounce off it. If I drop back down to the daily, that should still be present. And we get rid of this because we don't want too much mess on the charts. We can see where we're testing for resistance at the moment at the previous lower high. We could very well see a spike to the 71% level, hold below, and then continue to the downside, break through this descending trend line once again. So therefore, we would have a false breakout and multiple resistance points at this area. Okay, so we could essentially see multiple resistance points at this area and then continue dropping. But although we have the weekly showing that we haven't crossed over to the upside, so we haven't got that strong bullish trend at the moment compared to when we were strongly bullish here. We can see that on the daily, we have crossed over to the upside and the 50 MA is below us at the moment. So we could just see that further bullish move before reversing. However, the thing is, the key is to wait for certain signals from the charts. And that's where I use the 4-hour time frame. So looking back, let me change the visibility first. So looking back on the 4-hour here, we can see that we did have a bearish engulfing bar at this point here. Didn't draw that properly. So no, zoom that. I like to be a bit meticulous with the lines, because even when you're off slightly, you could essentially miss that reversal. So we can see that we actually wicked the zone here, the area, and we formed a bearish engulfing bar, which could have indicated a potential reversal at this point. However, we held at 147.50 as support. We formed multiple wicks at this area, and then we bounced off it. So this tells me that we have this gives you an indication that we do have potential divergence, but because we held at support here, we also had the 10 moving average respected. We then saw that bullish move, and we held at this point here for the time being, which is literally the peak of this resistance area. So we could very well see a bearish engulfing bar and then that move to the downside. Now, if we do move to the downside, guys, I am expecting a retest of 145.70. So note this down. If we do bounce off this area and we form a bearish candle, bearish reversal candle in the form of a bearish engulfing bar or pin bar or whatever forms at this area, if we do wick up to the 71% level, then we could very well see a pin bar. If we hold within this resistance area, we could very well see a bearish engulfing bar. And I also want to show you guys why I have this bearish view still in mind, although we've actually breached a fib. You know, we've actually reached no man's land within this fib that I had drawn earlier. All I'm going to do is just to confirm it to myself and to you guys is get the Elliott wave, and then I just start counting the waves basically. So for this, since this is a longer term downtrend, we use the daily, okay? Start from here, 1. So that's the first wave, second wave, third wave, fourth wave, fifth wave, okay? Upon the fifth wave, if you remember the rules for Elliott wave, upon the fifth wave, okay, we will always see a strong correction in theory, and most of the time that does occur. If it doesn't occur once, twice, or even 3 times, it doesn't mean that the Elliott wave doesn't work. It just means that at that particular time, you could see some more consolidation, maybe just a slight lower low, and then strong reversal and get the ABC reversal or retracement. So we can see here from where we are, A, B, C. So this is essentially the peak of resistance for the previous lower high. We've got the C wave here, which could essentially be that, you know, we see that reversal candle occur. After the strong bullish daily, it wouldn't be a surprise to me to see a strong bearish bar, which engulfs the previous day. However, the only way that would happen is if we get some sort of reversal candle giving us a bearish signal on the 4-hour time frame. Now, with the way I've broken down everything just now, does everyone understand what I'm doing? Is everyone following me well, or do you want me to go over something once again? So what I'm showing you here, guys, is how to break down the chart and essentially form a bias. Yeah, so essentially form a bias before we get any sort of reversal signal from the chart. So we haven't got a reversal signal just yet, but what I'm doing is getting an overall view and getting a view of what could potentially happen next. Okay, so I'm setting myself up, okay, applying my strategy, and well, I wouldn't say applying my strategy just yet, okay, because what I'm doing is I'm analyzing the chart, and then my trading is different to my trading is different to analysis. So trading, I have a set strategy which I want to see appear on the chart. At the moment, I'm simply analyzing the chart, and I'm showing you guys my analysis and my potential bias for this pair. Okay, so when I decide to trade it now, and this is what I want to make very clear, and most educators will never actually tell you this because they're not real traders themselves, but trading is different to being an analyst. Okay, analysis is completely different to trading. Oh, that's great, Juju. So your bias is to the downside, yeah? So going back to what I was saying, analyzing a chart is completely different to trading currency pairs, okay? Or trading the chart. Because essentially with your trading, you have to have a set strategy with set rules that you literally apply over and over and over again. And you do not deviate from that regardless of whatever happens, you know, at that particular time or in that particular trade, or even 2, 3, 4 trades. If you get 3 losing trades in a row, people are very, very quick to, you know, try and switch up their strategy and, you know, go back to the drawing board. You don't need to go back to the drawing board if you've spent, you know, many, many hours at the drawing board developing your strategy first and foremost. And then once you're actually trading live, all you're doing is applying that strategy over and over and over and over again. At times, you might have to refine your strategy if you find that, you know, the losing streak has become way too high. But that's only if you've got like a 10-20 losing streak with that strategy. Okay. If you're still within, you know, that 10 mark within your strategy of losing trades, you know, you do not need to go back to the drawing board if you spent many, many hours, you know, developing that strategy. Because going back to what I've said before in previous webinars, you don't determine your trading performance from 10 trades. You determine your trading performance after 100 trades, because then you can get, you've got a far bigger sample size and you've got far more data available to you to let you know if your strategy is solid or if it needs refining. So if your strategy gives you 70 wins out of 100 and 30 losses, then that essentially means that you've got a solid strategy, because that strategy is giving you guys profit 70% of the time. Meaning with good risk management, you will always be in profit in the long term. You will always be in profit. You cannot fail as long as you're applying disciplined risk management. And that's where a lot of people go wrong. Once again, a lot of people will get really confident when they're in a win streak and up their lot size for the sake of trying to make a lot of money very quickly. That's a gambler's mentality, okay? A trader's job is to manage risk first and foremost. It shouldn't even be called, we shouldn't even be called traders. I like to say that I'm a risk manager, because that's what we're doing. We're in the business of managing risk, okay? And investors, smart investors, if they are going to give you money, they want to make sure that you manage your risk well, that you are a master of risk, okay? You have to, you know, make sure that your drawdown is very, very minimal, very, very minimal, because they don't want to lose money. An investor who is giving you £1 million to manage does not want you to lose a lot of that money. They will always ask you, how will you protect my money first? They're not going to ask, how much can I make? Because they're looking for safety first, and then they're looking for yield. They're looking for places where they can get return on their income or return on their investment without too much drawdown. Because essentially, if somebody was to give you £1 million, investor that is, and he will have specific terms for that money to be available to you. If you were to literally some investors will literally say to you, if you lose, if I give you £1 million and you lose 10% of that million, I will literally withdraw all my money, and you know, we'll just call it a day. Like, there's no more managing my money. So you have to be a diligent risk manager. You know, people that have huge fluctuations on their P&L essentially will not be good for investors, because that just means that the risk manager is very volatile with regards to their risk management. So that's something that you really need to keep in mind, guys. You know, I always say you have to manage your risk, and people you know, neglect the fact that they manage the risk because they're looking to make a lot of money. They're not in this for the long term. Okay, if you're actually looking to make a career out of this, then you need to manage your risk. I can't stress it enough. But anyway, going back to the charts now. So now that we're at that C wave, we can essentially expect, I would like to see a bearish engulfing bar for me to get short, because I'm seeing potential divergence at this area. Now, you know, from experience with GJ, when something like this happens, followed by a very, very strong surge of buying, this essentially means to me we are at the end of this bullish phase, and we should essentially reverse. We could come crashing down past here and form new lows, or we could come here, we could pull down here, find an area of support, and then carry on to the upside where we break through this area, form support, and then shoot upwards. But going back to the weekly, so I've gone through fib, you don't need to see that. I've gone through the Elliott waves, you don't need to see that. If I was to just draw in a simple trend line from here to here, you can literally see where we held that, we broke through, held as resistance, bearish engulfing bar, and we saw that strong run to the downside. Okay, so that's very significant, because literally for the entire period of 2017 and, you know, mid 2018, we were bullish. Now we've been bearish, and to me, we should continue to the downside. That's just what I see, because of this longer term fib, because of the fact that we've broken through here. Everything right now is pointing to the downside. However, if we do break through this area, which is a lower high on the daily, then that to me will tell me I need to wait and see what forms around here. Okay, if we do get support forming around here, we could very well be headed for that next lower high around this area here, or even here. But because this one triggered the bearish move, to me it will be headed for this area here, this resistance area, if we do hold it as support over here. Now we do have this trend line, but you will never get a third test of a trend line break. Okay, you can see here we had one test, we had a second test, we drove to the downside, very strong bearish drive. Okay, if we do come up to this trend line, we could essentially just break through it, and this will no longer be valid. Okay, any questions so far?